And this is a relatively new position for us. So we've been looking for small pullbacks in terms of trying to add here. So we took that opportunity and we added, guess what? I mean, audience growth was up 15%. They're still growing the top line at 20+%. Really strong EBITDA margin expansion. Now, there was a couple of slight misses on delivery and freight, but I think those will be temporary, Scott, and I think there's a lot of forward momentum in this stock. So we decided to add to our core position here and kind of play it out and game it out over the next couple of quarters.
What do you think, Josh?
Look, I mean, this is a stock that's now in a 21% drawdown from its recent high, and is an RSI 35, which looks pretty washed out. So I like it as an entry point right here. I think it's a smart buy.
Surat?
Look, I mean, we trimmed it earlier this year because we had, luckily enough, were fortunate enough to buy it last year. We're watching this one for cash flow. They were supposed to buy back a lot of shares to make it net neutral. The question is the cash flow growth. They just had an agreement overseas today. So I do still like it. It's lesser position. They just need to execute. Oh, and by the way, they use Oracle, just so you know, for their cloud server.
All right, good stuff. Hey, Jason, thank you for joining us. We're going to keep it quick because I want to keep everything moving along, but we'll see you soon. I'm sure that's Jason Snipe adding to Uber and joining us to tell us about it. How about these markets? You know, Powell was speaking a little bit earlier today, and now I feel like we're sort of digested PPI. Now we're waiting for CPI tomorrow morning. PPI, by the way, which he called mixed. And the market's sort of acting that way because the market itself is mixed. Although B of A and their May fund manager survey, Amy says, sentiment is the most bullish since November of 21. What's it driven by? Optimism on rate cuts rather than earnings. What do you think?
I've been reading a lot of notes that, like, if economic data is bad, it's good because we're going to get rate cuts. If economic data is good, you're going to get earnings growth. So everybody does seem pretty bulled up, and that, like, there's no downside in the market, which is a little scary. But
these AI-related announcements that we seem to be getting every day, and we're going to talk about Google in just a minute. Alphabet's holding its Google I/O conference today. If that is just more evidence of why the money's going to continue to gravitate towards that trade. And don't forget, NVIDIA's earnings are on May 22nd. So those are fast approaching, too.
Well, that's going to be very important for the overall market. But I do think the broadening is more important than just AI announcements. And if we can keep on seeing that, and within the market, if you do get stocks selling off, but the market continues, that's very positive for the market, that we're not having just stocks selling off and the whole market kicking down.
No, but like Bank of America equity client flows today, clients have been buyers of comm services in 27 of the last 28 weeks. Tech also seeing inflows, true in 8 of the last 10 weeks. So the money continues to go towards these stocks. And even when, you know, some of these names have been pushed lower, Alphabet was a good example yesterday, the stock rallied back. And that was when OpenAI held its own sort of refresh day on its Chat GPT 4. Deirdre Bose is following this story for us today.
Well, hello everyone. Thanks. I think I did some mistake over here. I started broadcasting, then I stopped by mistake. I'm so sorry for that. This broadcast that I'm bringing to you guys today. Oracle just posted nice news about Elon Musk and Tesla, and Tesla is gonna be using Oracle, which is pumped big time. I think as a company they're gonna be using for the servers and everything. So $10 billion investment, and right now, as you can see right there, in a 4 hours chart, we have bear like short positions they need to cover, and looks like once you through that, we go back to the $130. It traded 5% up right now, 122.46. There was the news just come up. I say it right here. I got the news right here. Elon Musk XAI nears a $10 billion deal to rent Oracle AI servers. The information is reported. Elon Musk's artificial intelligence startup XAI has been talking to executives from Oracle about spending $10 billion to rent cloud servers from the computer over a period of years, the information reported on Tuesday. Sometimes it's good to have the app on the CNBC because the app kind of like show first the situation before actually the TV. So If I wait for the TV, it would be like a little behind it. So let's take a look. They talk about Google.
It's on goal here, right? They've got the search business. They've got YouTube. They've got Google Web Services. Waymo, look, I don't know. That's an awfully hard business. Everybody is trying it. Maybe they'll succeed. They've got other moonshots. Buying back shares actually has a dividend. And this whole thing where for many times over the last year and a half, people have sold the stock saying that they're a laggard in AI is just preposterous. It's flat out preposterous. They bought DeepMind many years ago. They have the resources. And every time the stock has sold off on perceptions of being a laggard in AI, it's been a huge buying opportunity, whether it was February this year with the AI generator or February of last year when Bard first came out and blew some question about celestial orbits. Those are always buying opportunities. At this multiple with all the shots on goal, it's easy to own.
Okay, Amy, you say you're not overly excited? You call it a show me story?
Well, we own Google.
Show you what? Good returns, 45% over a year versus 33% for Microsoft?
So we own Google. But I do think Google is potentially most at risk if AI takes off in a huge, huge way. Now, that's not our bet. But they own search. Search is a natural monopoly. They make so much money from it. We think that search franchise lasts longer than I think some of the other people. But I don't think that they're selling off because they're behind on AI. I think they get sell-offs when people get very excited about AI because people are worried about that franchise of their business. So that's sort of, so I do think the hype around AI sort of is to the detriment of Google or put some negative sentiment on Google because they think that that's the company that will be most disrupted. Again, I'm not necessarily saying I'm in that camp because I think AI is from a profitability
you seem
perspective.
To feel about it like I feel about Camden Property Trust. I don't know why we have a dissonance on this. I feel like there's just so many things going. I can't tell if you want to own it or not. Do you want to own it?
I do own it, so I do want to own it
Okay.
because I do own it, but it's not a huge bet for us. So that's how I would.
Josh, you want to settle this one? You own the shares.
On Alphabet. Well, it's no Camden Property Trust, but I must say this is one of the best performing large cap stocks in the market. Again, not quite yet overbought here. Actually has a lower RSI right now than most of the Mag 7, including Apple, believe it or not. So I think this is I think this is a situation where if you're going to be a shareholder, you're just going to have to repeatedly contend with these periodic outbursts on Twitter about how Google is losing to blank, fill in the blank. OpenAI is going to release a search chat product that is going to floor people. And 100% this stock will get knocked down that day. So then you have to ask yourself, does this like completely change Alphabet's future? Or can I withstand that kind of negative headline shock? If you can, then congratulations, you might be more of an investor than a trader. And if you can't, then you're basically going to be telling yourself, okay, this is how I operate in the markets. I like things when the news is good, and when it's bad, I exit. Neither is better than the other if you can execute well. To what Jim's point was earlier, I'm an investor. I could deal with those shocks. And by the way, shocks are easier to deal with when you keep getting all-time highs in the share price.
Yeah, what about, speaking of all-time highs, Amazon, which you called the other day, quote, the new Apple. Deutsche Bank says it's primed for a breakout. They got $210 at the price target. AWS CEO is going to step down, be replaced. But what do we think?
I just don't understand like how people could be in the market for as long as they are and not see that this is going to 250. Like it just like to me, just on valuation and growth rate, it just feels like this is something that people shouldn't be arguing with. On an enterprise value to EBITDA basis, Amazon is now trading at a 19 times trailing multiple. Not cheap for the rest of the world, but cheaper than its 3-year, its 5-year, and its 10-year median valuation. So what I'm saying, if these terms aren't familiar to you, is this is the cheapest you've been able to buy Amazon relative to its own valuation history in a decade. In the meanwhile, Amazon is putting up amazing growth numbers on an operating income basis. If you think about that Q2 2021 period through Q2 of 2023, the troubles is what we would refer to this period as. Amazon had a negative 0.14% CAGR. Now it's night and day. Look at what's happening from the middle of last year through now. We've got 4 quarters worth of data. Operating income has grown at a 150% CAGR. Year-over-year operating income growth over the last 4 quarters is 132%, 343%, 267%, 220%. So this company has gotten religion on expenses. They're not going to be playing games anymore on that side of the business. And in the meanwhile, they have all this growth. The cloud business is now a $100 billion run rate. The advertising business is the 3rd largest in the world and growing faster than most others. I feel as though this is just one of those stocks that people are going to say by the end of the year, oh my God, I have to own it.
All right. Well, up next, we do have calls of the day on Roblox, Regeneron, Costco, more. We have the debates, we have the trades, and we have all of that next.
Okay, gonna do a quick one. That come up as a surprise, would have made $20, but so Oracle got this news pretty good, but as you can see here, this big block over here kind of suppressed the price from 122. It's covering right now. Let's bring actually this. Let's see the flow live, and let's put an Oracle here to take a look. See what happened. Boom. 125 call. 121, 14. Yeah. So a little bit before the news, people in the morning actually posting a little bit of price action. A 119 call. This one got big time. Put for 100, probably sold for 200. Spot was 118. Alert 12 o'clock. Yeah. Anyway, so let's go back over here. Gonna do a quick one for today. We have Boots. It's the Boot is earnings tonight. Boot barn. Oops, didn't come out. Boot bar. So if you do live flow, it didn't show me anything. So I gotta go historical flow, and I go back from the 29. Actually, yeah, the 29 into today, and then actually gonna show me those 2 plays, the 135 buy call for November 15 and the sell put at 105 for May 17. So we're looking at the chart here in the bottom. This one right here. This is the chart for Boot. And as you can see, we have a little bit of everything in this chart. If you zoom out, we're looking at a 1 hour chart. And we have the short position started over here at 109. And also we have a lot of buys from 97 all the way up to 105. What you probably like is this sell this sell 105 call. So that should be this one right here, this bull over here, doing the 105 call. So I bought 1 share and I got 1 put, $90 put. Because they have last week, the guy went to a CNBC, and he posted his short position. So maybe something that is gonna come up. Say this sales is down year over year. All the case that he has for sell position was put on. So right now I have no open positions whatsoever, and because I have some places positions, but I don't know if he's gonna hit or not. What I did was I did some research, and on my save trades, I had this as my possible play. So I have the 95 long put. Today's return down $70, minus 35%. Today, MongoDB long 355 put, up $15 total return. Today, up 8.9% to 22. Monday.com, it's 160 long call, up 50. Down $50 and down $15. Okay, and a work day, I have bear put spread for May 24th because it's earning next week. So I have this one up today, return $15, but the total return down 1.6% at 750. So saying that, we are we're gonna see like what's happening today with Boot. I think Monday.com is tomorrow morning. This one, the bet was for something around $2,000, and it's one leg only. It was a call because it looks very bullish. So when I did it optimize, it kind of showed me like this being the best position with a chance of return and the profitable. So let's see if that hits for tomorrow morning. And for today, look at that, Oracle just smacking the bear block at 4 hours, just pushing the price back what it would belong, 117. Maybe tomorrow this, they have to, cover positions. This might be, let's see, 15 minutes chart. We gonna 119 is the support. Has a lot of support all the way down to 116. Maybe, who knows. This was trading at 128 not too long ago. It was all-time high. Looked like some type of head and shoulder over here, and then kind of hit support and went up. So I don't know. Let's see. Other than that, guys, we look same group, and as you can see, it actually turned negative right now. Was positive, and we have over here the put call ratio. It's going to be some 152 right here somewhere. So it's still like extremely bullish, even development and open interest. So I don't know, but this also is a reverse for some situation. And it was trading at you got this 3 minute. Here we go. It's trading inside this block, the big block. I purchased a 521 put. I sold it, and then I don't know what am I gonna do, because this is holding the price big time at 520. See the 5 minutes. Didn't show me anything. A lot of sell. 5 minutes normally kind of like push me to some decisions. Extreme rather support here 520. I don't think it's gonna go below 520 today. It's gonna be right at 520. So pretty much it. We had the craziness for GME today. Hit like it'll be over like almost $80, 75, 80, something like that. And now trading at 50, 49. Let's see, $50. And we see also exploded to the top. Now it's going down $7. I got some put on there, so maybe print right now. Take a look later. But the main play is for today is this one, Boot, which is the Boot Barn, and we have the earnings tonight. And this guy come up at CNBC last week and promote his short position based on the situation that he posted, saying like not every year sales it's down big time. So, and I don't think even like those big celebrities trying to support the boots for, you know, he don't see it happening for the market. So saying that, that's it, guys. Thanks for watching this video.